So we start now, and okay. Hi everyone. 안녕하세요. I'm Zhou. In Chinese, Zhou Li. I'm the assistant dean of Cheung Graduate School of Business, CKGSB. And welcome to this webinar. And to those who are not familiar with our school, I'd like to say a few words about our school. CKGSB was established in Beijing in November 2002. And the school has become the first choice for management education among China's most influential business leaders. And the school was actually generally financed by Li Ka-shing Foundation. As now, more than 50% of our 16,000 alumni were chairmen and CEOs. And that's how we are quite different from a lot of other schools who concentrate primarily on the middle management. From day one, we aim at the top of the pyramid. That's in our dean's terms. And in addition to the Chinese programs, we also offer English programs or other programs in other languages. Actually, since last year, we started offering programs online in English, and also with, as I said, with simultaneous translations into Russian, into Korean, because we had a lot of participants from Korea. And okay, another thing that I'd like to emphasize is our faculty. You know, our faculty used to be tenured professors, or sometimes some of them were chair professors at the top global business schools, such as Wharton and CMU. Okay, and so the topic, you know, we are very honored to be partnered with Chosun Ilbo for this ALC forum. And actually, we have been their partner for 9 years. And so each year we would have our professors and students, you know, support this very great event. And we are very honored that actually we co-organized the first webinar, ALC webinar, last year, exactly almost the same time this time right now. And we are very happy that to have Professor Robert Barrow from Harvard, and our dean Cheung, and Dr. Zhou, Dr. Jeon to be the speakers. And the event was very successful, and we had right online we had 800,000 participants, and also a lot of people watched afterwards after the recorded version. And so we estimate more than 1 million people watched our webinar last year. And so this year we are also very happy to have to work with ALC or Chosun Ilbo. And so the webinar today is about post-pandemic global capital markets. We are very, very happy to have our two distinguished speakers today. Mr. Henry Fernandez, Mr. Henry Fernandez, and who, you know, probably doesn't need too much introduction, who is the chairman and CEO of MSCI, a company, you know, listed in New York Stock Exchange, and with revenue over 1.5 billion US dollars. You know, very well-known company in the world. And Dr. Kwang-woo may not need much introduction in Korea. He's like he's another legendary figure in Korea, and who used to has a very important positions in the cabinet, and played a very important role in the Korean economy, and also globally in Asia and Asia Pacific and globally. And so actually, Dr. Jeon or Kwang-woo was the one who initially designed the structure of this webinar. And so we will talk about starting from the outlook of the global economy and Biden's policies, and then we are going to talk about the global capital market, and then we will spend some time on the topic that all of us are very interested which is ESG. So, okay, so we'll start with the global economic outlook. So, if you don't mind, Henry, I will start with Kwang-woo because he was here last year. And last year, Kwang-woo, you remember, Robert was the one who was very optimistic, and he was predicting a very strong V-shaped recovery. And it's so nice to see you after a year, Kwang-woo. You haven't changed a bit, even the world has changed so much. Okay, and so do you, as of now, the last year ago, you were the moderator, and this time I'm the moderator, and you're the speaker. So what do you see what do you see the world economy is going from here? We saw the strong growth in U.S. and in China and in the worldwide, in Korea too. And so is it the beginning of the V-shaped recovery, or is, tell us what do you think? Kwang-woo.
First of all, I would like to thank you for moderating this very special session for Chosun Ilbo, and also there's a prelude to Asian Leadership Conference, which has a tremendous reputation and tradition of its own. Now, I'm also thrilled to have my close friend Henry for this very special event, because his presence makes it a lot different for any key messages that we'd like to send out. By the way, we had a tremendous gathering last year on ESG issues, and that sparks the public interest in Korea and elsewhere as well. So we have seen enormous enthusiasm for ESG investing since last year, and Henry has been one of the key drivers for that. So I'm so very happy to have Henry here, and I'm sure he will help us raise the profile of this series of events. I appreciate that very much. Okay, now with that, now economic prospects. In fact, yes, about a year ago, when we first started this this webinar, the situation was very bleak. Nobody could be, dare to say that any quick recovery is on the horizon. But yes, here there is some optimism. And as it turned out, starting this year, we have seen a very impressive recovery from major countries, notably United States. Now, of course, China has been an important contributor to global economic rebound, but U.S. more impressively as a combination of huge fiscal stimulus and also the leadership in vaccination. This combination of those two created an environment for very impressive recovery so far, and perhaps even more progress in the second half of the year. So we are talking about now, officially IMF and others are talking about 6.4 or 6.5 growth for the United States, contributing to big rebound in the global scene. But as some investment banks predict, it could be even higher, 7-8% range. So this is a welcome development, but there is always light as well as a shadow in the quick rebound. That is that, as IMF pointed out lately, the issue we have to face is divergent, so-called divergent recoveries, uneven recoveries across countries, across continents. In fact, there are some countries like India and some countries in South America having serious problem with second wave and lack of vaccine supplies. So I think this is a worrisome scenario, and the international community should work closely to deal with this so-called K-shaped recovery, the very divergent recovery for the common good in the world. So this is one issue that we have to tackle. On macro side, I'll be happy to talk about capital market implication later.
Thank you, Kwang-woo. Henry, it's very nice to meet you first time on video, and you're, as I said, you're a legendary figure, and you're pretty well known in the world. Thank you also for spending your evening time with us. Your dinner time. You're in New York. And by the way, we also have an office in New York, Midtown Manhattan, and hopeful to see you in New York sometime when it's possible. Kwang-woo gave a great, his view about where the economy is going, and he quoted, IMF, World Bank, and others. And for you, you are the CEO of such a large company and have your own analysis. So would like to hear from you, your unique perspective, probably, from your independent view. Go ahead, Henry.
Well, first of all, thank you for having me. It's always such a great pleasure to be here with my good friend Kwang-woo, and nice meeting you as well, Lee. I am very optimistic and extremely bullish on the direction of economic activity in the next 2 or 3 years. When I have studied historical economic events of the nature that we endure in the last 18 months or so, such as a national disaster, such as a plague, an epidemic, throughout history, what you see is enormous devastation that takes place, in a natural disaster, or the Black Plague of the 1350s, the American Civil War of the 1860s, World War I, World War II, and the like. And out of that incredible devastation comes a period of time in which, for lack of a better term, the animal spirits in the world begin to get unleashed, and and people want to live, they want to consume, they want to get together, they want to celebrate life, after a major devastation or lockdown. And in this case, it is also fueled by an enormous amount of monetary policy and a huge amount of fiscal policy, fiscal stimulus, in the economies. So, clearly it's all dependent on the vaccination process or the herd immunity. The economy will go where the vaccinations go, depending on the country or the region of the world. But I think that we see now in the U.S. Leading the path here, and China to a large extent also. In the case of China, it wasn't vaccination. In the case of China, was containment of the spread of the virus in a very dramatic way. In the case of the U.S., is vaccination and lockdowns, obviously. But what we see now is that, anecdotal evidence and statistical and quantitative evidence is consumers want to consume. They want to enjoy life. They want to go out. They want to spend. They want to trade. They want to do that. And we are already seeing the global financial markets, which, as you know, are discounting mechanisms of the future into the present, already pricing a lot of that huge levels of economic activities. You see that in the equity markets, for sure. You see that in the in the hard commodity markets, the hard commodities, copper, iron ore, and others. And you see already the start of incredibly bullish, sentiment in those markets. I do agree also that there will be significant divergence in this economic recovery. There will be the big countries and the big regions of the world: U.S., China, hopefully soon Japan. Clearly, lagging behind is Europe, but at some point they're going to catch up on the vaccination process. Leading the way. Those are the large economies of the world. And there will be other economies that, for one reason or another, especially because of the wave of the pandemic, such as obviously India, Brazil, that are going to lag behind. And those are, major economies of the world, but they're not as big as the other ones. So there will be divergence, and there will be a period of the have and the have-nots. The period of the people that are doing well and the people that are not doing well. But eventually the whole world will synchronize and will catch up. So if anything, at this point, we ought to be worried about overheating, at some point of this enormous amount of economic activity. But, for now, let's enjoy it while it's beginning to develop. Let's not worry yet about what could happen. Let it wait. Let us see how it progresses. But I think we're going to see one of the most expansive periods of economic growth in the world in decades, if not throughout the last 100 years.
Thank you, Henry. You were not here last year when Professor Robert Barrow was saying, giving his, crystal ball reading. He was saying that the reason he expected V-shaped recovery was actually what you were just talking about, because of the capital, human capital and physical capital have not been destroyed like the wars, natural disasters. So even without attending his lecture, you probably graduated with his PhD student even. All right. Okay. So we started. I think we can. I agree to both of you that the rebounds will be strong and the recovery is going to be strong, but it's going to be divergent. And I 100% agree with Henry that the activity will go where the vaccines goes. And U.S. and China are leading, and but there are other countries who are not as fortunate to have such a huge amount of vaccine available. We will have some issues. That's why I think our dean talked about last year. That's why the global cooperation is more important than ever. From our point of view, this is a global issue. It's a reminder that we need to work together globally, and we cannot leave any nation behind, because we do live in one world. Okay, so with that, we Henry talked about a little bit about are we overheating the economy, and that is a pretty good way to start our next topic, which is about the policy of the Biden administration so far. And we all know he already has this American Rescue Plan, and we are now talking about the American Family Plan, American Jobs Plan. And Kwang-woo, maybe you are a policy maker. You were a policy maker. Now you are a policy advisor. Mm-hmm. How do you evaluate Biden's economic policy
now? Yeah. Well, since his inauguration, recently he has passed 100 days in office. Now, most of the observers in and outside of the United States would agree that he's been more impressive than previously thought, because during the campaign, some people worried about his health and his sort of boring sort of image, if you like. But the situation has turned around quite a bit, and it started with $1.9 trillion stimulus package, followed by $2.25 trillion of infrastructure. program to rebuild America in the very long-term perspective. In a way, reactivate U.S. economy for the future. I think that was also very much needed and very uh, uh, very proactive program. And also very recently another 1.8 trillion dollars, also altogether about $6 trillion worth of the program. The last one was more of social safety net, family plan supporting programs and so forth. I think this has to do with the legacy we have had from COVID-19, because obviously the third program, protecting more vulnerable segment of the economy, is that to deal uh, with the this sort of K-shaped impact of COVID, a more serious impact on the less privileged people. So social safety net has to be strengthened to deal with that problem. And also this second part of package addresses climate changes kind of issues, renewable energy programs for the future. So forth, very much related to ESG issues at macro level. But anyway, all these programs, we would think that this uh, very well thought through, and we're hoping that that will be executed uh, very well. Although they have to go through the Senate discussion down the road, some modification could be made to that program, the size of the funding and so forth. One point that I would like to take note of at this point is about one segment of so-called Bidenomics. There, the U.S.-China relationship, which is essential for the future geopolitics and also economic prospect. Now, there are certain segments. We often talk about three C's in Biden's foreign policies. There are three areas: area of collaboration, area of competition, and for collusion. Now, what I would like to emphasize here is areas for collaboration, cooperation. There, Mr. Biden has emphasized, and he's called upon the global summit meeting on climate change as well. This is the area dealing with the global issues on environment. Is the area where U.S.-China cooperation is very essential for the success of global endeavor. And I think we had a good start on that point. So we are hoping to have that move along very well, because after all, it's great to see V-shaped recovery from the massive government stimulus programs. But after all, what we are looking for is sustainable growth. After all, that's what ESG is all about, and that's what all the policymakers and also business managers are eventually looking for as well. So this is a great time to think about V-shaped recovery, but also at the same time, this is a good time to think about sustainability as well.
Thank you, Kwang-woo. You've been very support. Looks like you are pretty positive about Biden's policy with some advice or reminders or warnings. Great. And Henry, I know you are a good friend of Kwang-woo, and but good friends do not necessarily agree with each other all the time, and that's what makes them best friends actually. So do you agree everything what Kwang-woo said, or you have another, one thing I don't know if you agree with Kwang-woo about the tax, corporate tax hike. Would that be good? Feel free. What's your view about Biden's policy so far?
Yeah, so I think that President Biden has started strong in his administration. I think the ability to roll out the vaccine in a very effective way has created huge economic impetus. The ability to pass through the majority that he has, the Democrats in Congress, a stimulus package bodes well. I think the areas that I will worry about is that what America needs for long-term competitiveness is not redistribution of income, is not a huge amount of progressive policies. What America needs is a major investment in the country, investment in infrastructure, for sure investment in education, which has been lacking, particularly in K through 12 education, investment in setting up the conditions for more businesses to prosper and develop. America also needs to figure out a way to work peacefully with China, because we have to admit that the two poles of economic growth and political and military and economic power in the world are going to be these two countries. So what I worry about a bit is he started strong, but is beginning to veer off into a more progressive redistribution type of economic program, rather than putting a significant amount of money into the investment into the country that will last for decades to come. And I think he can do both. I think there is a balance, because we have to ensure that this is inclusive capitalism, right? That we don't leave a lot of people behind. But he runs the risk of catering significantly to the very liberal, very progressive part of his party, in veering significantly in that direction. And secondly, he's running the risk of listening to the bipartisan chorus in the U.S. about viewing China as an enemy, and therefore treating China exclusively as an enemy, and creating policies that are going to create enormous friction, in the world. So it's a balancing act. But so far he's done well, but you're beginning to see a little bit of the symbols of this, or the signs of things that we need to monitor and be concerned about, so that everyone in the world lives peacefully, and everyone in the world can prosper in a way that what the world needs is definitely help for the less privileged, for sure, because this pandemic has devastated a lot of those people and a lot of those jobs. But we have to keep our sight on the fact that what the world needs is investments in order to create further economic growth and prosperity.
Thank you, Henry. Very great, insightful comments. Kwang-woo, would you like anything to say to add to your comments after you're hearing?
As usual, Henry made very insightful comments and thoughts. That's the kind of issue that the current administration in the United States should keep in mind. After all, what will make it different is more forward-looking investment that will turn around the fate of the country in the coming decades. Now, Lee briefly touched upon taxation issues. In fact, with the level of fiscal stimulus, the kind of money the government is putting in, obviously somebody has to finance that. Now, even though U.S. has a privilege of having anchor currency, reserve currency, dollar, but that doesn't mean that they can uh, expand fiscal debt indefinitely. Definitely not. There's certainly huge side effects they have to deal with. So to restore fiscal soundness and to make the fiscal program sustainable, they would have to raise tax. Of what level? The debate is going on, but I think that is something that is inevitable. They have to deal with that, and obviously in close consultation with the business community, so that the optimal level of tax hike could be reached for the industry, for business to be able to absorb this sort of fiscal shock and also help restore fiscal soundness in the economy as well.
Thank you, Kwang-woo. Yeah, okay. I think you both, have something positive to say about the policy, and what I like his policy in general the best is he concentrates a lot of efforts on the domestic issues, and which relate to what you both care about is the relationship between the U.S. and China. In my view, if the U.S. economy is stronger and he is investing in the long run, and there's a less reason to be confrontation between the two countries. And additionally, I really like what you just said. Compete. We can U.S. and China can be competitors, but they don't need to be enemies. That's a big difference. And I think in business world we are talking about co-opetition. We compete, but we also cooperate for in other areas, especially when the stake of both sides are on the line. It's better to work together on issues like climate change and on pandemic, public health, and global security, peace. Those issues, really require the two countries to work together. And so, in my view, the two countries, we can. Everybody loves the Olympics, but the Olympics don't, the first people don't kill each other. They compete, they don't kill it. Okay, so. I think Henry, from business world, probably you can have more lessons to teach the politicians. How people can live as competitors, not as enemies. So okay, so with that we conclude our discussion about the Biden's policy. We start the next session, which is about capital markets. Okay, so the capital market has been pretty strong until yesterday, probably, and again, I think we are concerned, about inflation. Some people concerned inflation, and I heard the Fed has been watching this very carefully about the inflation, and so again, Kwang-woo, if you are advising to the Fed, how do you read the economy today, and are you thinking about raising the interest now, or you are going to watch it for another little while? Kwang-woo, please.
Yeah, as always, the recovery of economic activities has both good and bad news to the market. Good news is, of course, improving corporate earnings and competitiveness and all those positive things there. And macro environment is improved for better performance. But the other side of the coin is, of course, rising economic activities has a potential to raise interest rate and through inflation inflationary impact as well. It's something inevitable, although we are not sure about the timing usually, but it's going to be there sooner or later. So this is a dilemma for Fed. Obviously, they would like to avoid something like taper tantrum, like typical of a Ben Bernanke type shock to the economy. But certainly should be mindful about potential inflationary pressure building in the system. Now, as Henry mentioned earlier, this recovery is very much driven by consumption. Now, consumption, some estimates suggest that cash holdings accumulated over the past 1 year has reached something like $4 trillion around the world. And when the situation improves, vaccination creates herd immunity, say. Now, this so-called revenge consumption, this huge consumption coming back to the market, it is unavoidable to have a higher price inflationary pressure there. So it's inevitable. So certainly the Fed or government policies should be geared to soft lending without creating enormous shock to the market. Certainly this make it in a phased way. Like always, in the early phase of economic crisis, the strategy is swift and sufficient policy. You have to provide liquidity cushion in a big way very quickly. But exit strategy, I often talk about that as discharging from the hospital. You don't rush. Coming out of hospital, even though you feel better, because that's the time you need to be very prudent to think about when I should be discharged from the hospital, because am I really better shape, or is just a temporary effect of various shots that I have been receiving. So you better make sure of that. And so the exit strategy should be implemented in a very prudent and phased way. So that's what I would advise to Fed and government policies, not just in the United States and elsewhere, because I gather that even Canada started reversing quantitative easing lately. And all other countries should be mindful about executing exit strategy so as not to create unnecessary shock to the capital market.
Thanks, Kwang-woo. I think that's echoed what you said last year before, last year exactly. And you said during crisis, the government needs to get in and decisively. And now you're adding that they should not exit too quickly. Thanks for your advice on behalf of Fed and other governments. And Henry, what's your view? You hope you are not 100% agree with Kwang-woo. That will be boring.
Well, I think we are in a period of time in which we have significant amount of excess supply in the world and still relatively weak demand. And for the global economy to get to a point of fairly full employment of people and utilization of resources is still a long way to go, given the enormous dislocation, that took place. So therefore, I think that that the risk right now would be monetary authorities around the world withdrawing their stimulus too early, and then we end up in a double dip. Not even a double dip. We are in a dip right now in the global economy. There are only a few countries that are just beginning to re-energize and re-accelerate. So I think we have a long way to go here before the monetary authorities begin to get out of the hospital, as my good friend says, right? We gotta make sure that the patients, in plural, not just a patient, but the patients are healthy, can be discharged without any problems and the like. And therefore, given that that is the case, I believe that this significant amount of economic growth that is coming, in order to eventually create equilibrium between demand and supply, at a high level, it will usher a period of significant profits, a lot of corporate earnings, and continued high levels of equity valuation, in the world. It would also usher a period of potentially a large super cycle in commodities. I think we just ended, a year or so ago, a long cycle of declines of commodities. And I think we're going to begin to see the beginning of a long cycle in commodities that is going to be congruent with that level of demand around the world increasing significantly, and eventually, obviously, utilizing a lot of the excess supply that exists in the world. When you analyze any economy, a lot of the traditional measures of employment and utilization of other resources are clearly outdated, are clearly from prior epochs. What we have today has been a major shock for a prolonged period of time, and a lot of that excess supply is hidden, around the world. Some of it is you could see it outright, but some of it over there is hidden by people withdrawing from the labor market. But at some point, some of those people will return to the labor markets, as an example. So that's if you go back to what I said at the beginning, that is fundamentally why I am pretty bullish about this economic cycle. And I don't know if it's going to last 10 years, like the last economic cycle. That was one of the longest in the history of the last 100 years. But I would venture to say that it will be long, and clearly the risks will be overheating, inflation, high levels of interest rates, and therefore putting the brakes on the various economies of the world. But I think we're far from that.
Okay, so it looks like good friends do see things eye to eye, and you both agree to now to pull out of the stimulus too quickly. I'm not an economist, but I would trust what are the top two of the top economists in the world just said. But what do you think where the dollar is going? Foreign exchange market. Kwang-woo, would you like to start?
Which side? I didn't.
The dollar, the U.S. dollar, the exchange,
dollar.
Market, foreign exchange market.
So,
if the inflation keeps going, what's going to be the impact on the dollar, and if the government and the Fed doesn't raise the interest rate?
Okay. of course, in the short term, dollar value, any currency value, is closely linked to the level of interest rate. Uh, uh, but it's depending upon how the latest macroeconomic data come out. The market tends to react to that. Earlier this year, we have seen a series of dollar strength. But lately, because of the rather poor employment data coming out very lately, there's some softening sentiment prevailing in the exchange market. So dollars value has subsided a little bit. Now it's but in the long term, in fact, dollar's value would have to reflect the true competitiveness of the country. And sustainable level of growth the country can present. So if the very comprehensive, far-reaching programs that Biden administration put together are being implemented in the coming months and years, I think is overall dollar's strength could be sustained. This it's virtually impossible to predict day-to-day changes in exchange rates. But I think looking far beyond what we can see every day, I think the underlying force will be there, in line with the rebuilding America policies, the infrastructure, education, and those the underpinning strength of the economy is being reactivated, and then the dollar value will be pretty much firmed up. That's the way I see it. Yeah.
Okay, thanks, Kwang-woo. And Henry, anything any prediction you have for the dollar? Where is it going, up and down?
Well, there are many pundits that are predicting a major decline, of the dollar for a lot of reasons. Clearly, the huge amount of indebtedness that the country is taking on, and the level of potential competitiveness or lack of relative to some of the Asian economies. But it is throughout my life, throughout my life, I've learned a big lesson, and that is it's very hard to be bearish on America. No matter what people say. I'm a global citizen. I'm also an American citizen. I live in this country, but I didn't grow up in America. And I try to look at every other region of the world as if I were a citizen of that region of the world, in order not to be biased, by my location in New York City. And when you see the amount of flexibility that America has in its labor markets, in its political system, when you see the amount of innovation that is taking place. So who are the technology leaders of this world right now? Who are the biotech? Who invented the vaccines, in this world? It wasn't only the American companies, but the American companies play a large role, in the process. When you see the industries of the future, whether it's technology, biotechnology, or clean energy, or renewable energy, and the like, it's very hard to be bearish on America, and therefore it's very hard to be bearish on the dollar. Yes, so people do see the level of indebtedness that the country has, but that's one side of the ledger. They don't see the other side of the ledger, which is that level of indebtedness hopefully will bring a large level of economic growth in the country, a large level of competitiveness in the country, and therefore you have to look at both sides of the ledger. Not only one side, in order to predict what the currency will do. I think that in the shorter term, clearly the dollar is going to be in a range of trading, not a narrow range, but not a very wide range, because it has run up a lot, clearly, during this period and the recent past. But I just don't see a major decline, in the dollar over the longer term. So in that, I agree with my good friend, for many of the reasons, but I gave you my own as well. And particularly, I think it's also important in this conference to emphasize is not only our views, but what are the other views that the world has. And there is a large number of people that believe that the dollar will be 20, 30, 40% down a few years down the road.
Okay, thank you.
If I may,
Sorry, go ahead.
okay, Henley, as usual, made tremendous points a while ago. I would like to amplify one point. That is, he touched upon the American leadership in, for example, vaccine development. My sense is that after several years or so, if we look back year 2021, I think we may say that the leadership in vaccine development, distribution, may prove to be a game changer for the global leadership and for the future of that particular country in the coming decades. I think that was a very tremendous development, and the kind of underlying research capacity and genuine technological development capacity. Is this something that makes a country different? And especially in the fight against the pandemic, like we have, and certainly this will not be the last pandemic we face. The medical science and the very fundamental technological leadership will be a very important leadership element for the future of the world and the country involved.
Okay, great. Thank you both for the great comments and about the fundamentals that support the dollar, which is the American leadership in technology, innovation, in other areas. We know that U.S. is still a most innovative country in the world. There's no doubt. All the breakthrough innovations came from out of the U.S. We really do not have much time. I have a lot of questions to get your insights, but I don't know how much time we have. But let's make sure we get the most important thing covered, which is the ESG. And I personally would like to talk about digitalization, but probably Henry can lead us, the discussion in both, ESG and digitalization, which is another important factor in our economy globally. So for the ESG, MSCI is a leader in the indexes, and but now I heard that Kwang-woo was the kind of the first person or the pioneer in Korea to start ESG, but now he has some little bit reminders for people. Maybe this time we start with Henry. Where do you see the?
Sure.
We heard that ESG is pretty strong. It looks like Europe is leading, and how about the other parts of the world, U.S. and Asia primarily? Please, Henry.
Yeah. So as the world integrates rapidly, communicates, and connects very rapidly, I think we're entering a new phase of capitalism, which is a highly interconnected, integrated, communicated form of capitalism that in such a place you cannot ignore social issues like diversity, inclusion, equality in multicultural societies. The U.S. has become a multicultural country. France already is, the UK, and many other places around the world. So we have to learn from some of the good things that India has taught us about living in a multi-ethnic country. There are some bad things, but some of the good things. So therefore, ESG is here to stay in a big way. Governance is very important because capitalism relies on companies to do the allocation of capital in the world. And if those companies are not appropriately governed, they're not serving society well, and they're not serving their shareholders well. The social issues are mentioned, and then the environment. What is happening is that I believe that ESG is a big trend that is taking place today. We have seen it in the last year and a half, especially during the pandemic. But a much bigger trend is right behind it that has the potential of eclipsing ESG, and that is climate change. So climate for sure is part of ESG, but I think it'll be broken out of ESG at its own trend. And this year, 2021, is going to be a year that will reflect back and see as an extremely pivotal year, just like 2015 was with the Paris Agreement. This year, there is a confluence of events that are taking place that is making climate change, center in the capital allocation of the world, and that is clearly the COP26 meetings in November in Scotland. There is the Biden administration and the focus. Half of the capital in the world is provided by the American economy. So when you have the leader of that economy calling on the capital of that economy that they have to be responsible and play a large role in climate, that's going to be a major game changer, in the world. Lastly, I think the China-U.S. relationship, this is one area in which they can sit at the table and have a common goal, as opposed to looking at each other and seeing the two countries as competitors. And I think they're going to use climate as the place where they find common ground, where they find friendship, where they find abilities to work together, in order to then use that for all the other conflictive, parts of their relationship. So that's another thing that is happening, this year, and we already saw it in the meeting that just took place a couple of weeks ago, and what you saw in China and what you saw in the U.S. Now, not everything they're going to say is going to be what we want at this point, but that is okay. We're making progress. So what I'm saying is ESG is big in the world, is going to continue to be big in the world, but on top of that wave, there is a much bigger wave coming that is going to redefine capitalism in the world. It's going to create a repricing of financial assets, a reallocation of capital, to those sectors that are going to be more friendly to the climate, and it's going to deprive capital from those places that are going to be less friendly, to climate. So that's the topic to really focus on, climate change, in addition to the wave of ESG.
Thank you, Henry. As insightful as always, and Kwang-woo, and anything to add? And please.
Not much to add because he covered Henry covered very important points pertaining to ESG. Certainly, it is it's not just a short-term blip or fashion. It is becoming a mega trend, if you like. ESG is something that that will be with us for a long, long time. And Henry's point on redefining capitalism in a bigger way out of this ESG management is extremely well taken. I think we should keep that in mind. And this is the way that we make capitalism more sustainable and responsible as well. The only small point that I would like to add is that, in fact, I saw the report from MSCI earlier this year uh, talking about the key trends in ESG this year. One of the points made there is that even with this huge interest and enthusiasm for ESG, we still have very conflicting views out there. There are hypes, there are very extreme enthusiasts, but at the same time, skeptics there. They're not, fully uh, appreciating the value of the CSG, whether they will be there for long, or this is rather the concept is vague in a way, and the ranking rating ESG varies from one firm to another. So there are areas where they feel a bit uncomfortable as of now. But I think it's a transitory uh, process toward, I'm sure, industry leader like MSCI is working on standardization of the ranking or assessment disclosure guidelines and so forth, which are very important ingredient of ESG management system to be mainstreamed. So we'll be there, but there's still we should be mindful about some people, or corporates, or investors there who are less convinced than most others of the ESG's future. So I think we need to continue to work on those sort of impediments to make the much desired ESG system be fully in place. And for those too enthusiastic, if you like, I think on the one hand it's good, but at the same time, what we really need is the pace of marathon for this ESG system to be successful on the road, not the pace of 100-meter dash. Usually that worries us a bit, and you agree? I don't I don't intend to chill those enthusiasm, but we want really a sustained heart or uh, the uh, the interest for this ESG is essentially a long-term goal for all the corporations and governments alike. So that's what I would like to add to what Henny said just before.
Thanks, Kwang-woo. On that note, I just like to share a little bit about CKGSB experience. And because, as I said at the beginning, most of our students are chairman and CEOs. And we have our biggest program is not a full-time MBA, but an executive MBA program. So we have like 600 executive MBA students every year. And because we're realizing the importance, this group in the society, in the economy, and we start introducing, we would like to encourage them to have a long-term view of business and their lives much earlier. In 2008, 2005, started introducing humanities to the curriculum, business school curriculum, history, philosophy, even religions, to help them to develop, a long-term view. Otherwise, typical financial professors will tell them, net cash, current, cash flow and discount the cash flow value. That's all they care. But we want them to take a longer perspective. What's really good for the society, for their business, and so we have been doing that since then. And we started, philosophy courses many years ago. So our first class EMBA class is not a marketing or finance. It's about philanthropy. And starting last year, we even upgraded. And for all our EMBA students, 600 of them each year, chairman and CEOs, they need to have a real project of social innovation, social entrepreneurship. So for some reason, we use the UN SDG guideline. So we ask each of them, here is the UNDG guideline. What are you going to do? Your business, yourself, what are you going to do? Starting from the very beginning of the year. And there's a year-long course, and it's compulsory. And so by the end of the year, also for these 600 students, we invited about 100 mentors who are specialized in this kind of SDG development in business world, primarily how they what we call the business for good course. So we build that as a long-term year-long course. So this is something we are starting experimenting. So, yeah, the reason I mentioned that is we believe that ESG is not only the finishing line. We started from the very beginning, earlier, and so help more and more companies can meet what the target set up by MSCI. So that's something I'd like to add. Yeah, I think we about the end of all the time we have, and so any final remarks from each of you, and particularly for what advice you would give to our young professionals or young students even who are going to be listening or watching this webinar. Henry, would you like to start? You or I would like to read about you. Is what you? Sorry for interrupting again. You mentioned in one of the early interviews about entrepreneurship, which what I value very much. I tell our students all the time. I tell them that entrepreneurship does not always mean starting your own company. You can be entrepreneur in a big company. That's what you started with, actually. Sorry for interrupting. Please go ahead.
Yeah, so I for sure respect and admire a great deal the government sector in an economy, because they set the rules, they provide the conditions for participants in an economy to engage in contracts, to create companies, to have a fair level of competition and all of that. Ultimately, what the long-term development of any society, it's about business. The government can only facilitate the process, but ultimately it is businesses who create a large level of employment. They create products, they create service, they create innovation, and all of that. And an important part of that is clearly the entrepreneurial sector of business. In terms of new startups, new ideas, is a creative and destructive process, obviously, but that's the nature of what it is. And my message is, in the new paradigm that we live in business, even though we feel that we're all capitalist, there is a new capitalism that is emerging, which is stakeholder capitalism. We got to ensure that we have the right policies with our employees to create the conditions for them to excel. We need to have the right approach with our communities, and so on and so forth. That's what we call ESG, in general. And what that it means is, in the past, it didn't matter, because companies were so distant, economies were not integrated, communities were far apart, and you could live in small bubbles. We don't live in a small bubble anymore. We live in a highly integrated one bubble, and being able to create the conditions for that capitalism to survive and to prosper and to serve society, we need to incorporate a lot of these externalities that are taking place into how we run companies, how we price assets, and how we do capital allocation. And it's ultimately about business. The government can tell us, the government can regulate, the government can dictate, but ultimately the doers in a society over the long term are the companies. And that's what you're doing in your business school. You're training the people that are going to do that.
Thanks a lot, Henry. Hope you will come to our school to speak to our students in person someday. Yeah, Kwang-woo, your turn. You're such a wise man.
Yes.
With so much
Henry
experience.
made his statement so very beautifully. So following his footstep is always a tough challenge for me. In short, the phrase that the Pfizer company's CEO said lately caught my attention. That is that what he said was that through the development of Pfizer vaccine, he realized that corporates, business, can really tackle the greatest social problem themselves. This is a very profound statement because, role of government, role of private sector business evolves over time. Now, of course, depending upon the political structure any country has, that role varies. But by and large, we are in a situation where business, especially innovative business entrepreneurs, are the drivers, and government should play as a facilitator, and not the other way around. So I think it's an important message that we should get, especially in the period of paradigm shift. Now, this because of a coronavirus pandemic. Now, pre and post pandemic, we have a different economic, political, social paradigm. Now, in this changing paradigm situation, clearly the vibrant, innovative private sector entrepreneurs' role are becoming bigger. And that should be respected by the government, and policies or regulations should be adapted to changing environment we face, as Hanley and I have described so far. Thank you.
Thank you, Kwang-woo. As you said, it's hard to follow Henry, and it's even harder for me to follow both of you. So I will not even try to make my remarks. And all I want to say is thank you both for the very insightful, enlightening comments over the webinar, and thank ALC, Chosun Ilbo, for organizing this, for inviting such two legendary speakers to speak to us. And thank all of you, or the audience, for watching this real time in the future. And I look forward to seeing both of you either in New York, in Beijing, Hong Kong. We have offices, and in Seoul we have a virtual office already too. And hope to, look forward to seeing you in person sometime. Thank you so much.